All right. Hello, everybody. Thank you so much for joining in today. My name is Zonzi, and I am the host of the Showcase AMA series here on the Polygon Discord. Today, we got two guests coming in from Overnight Finance. How are you guys doing today?
Doing awesome. Thanks for having us.
Thanks for inviting. Yeah, pleasure to be here. So it's awesome day.
Yeah, pleasure's all ours. Happy to have both of you here. Big fans of the project. But before we get into Overnight, let's talk about what's your backstory and what got you into the Web3 space. Maybe Andrew, you want to go first?
Yeah, actually, I was not seriously in the crypto space before I met Max, but before that, it was just a retail BTC trader, just a little bit here, a little bit there. But my background is marketing. I've been doing 15 years of marketing in companies like Adidas Group, Google, and Facebook. But then I met Max, and he convinced me to bring the marketing expertise to crypto industry, and that's what I'm mainly doing here.
Yeah, and I've been a traditional finance person all my life. JP Morgan, Morgan Stanley, 17 years with the Boston Consulting Group. And then after a certain point in time, I wanted to do my own businesses. I created a company called Mac49 for Eastern Europe. We sold it 2 years ago, and then I wanted to do something else. I've been in crypto space since 2017. In 2013, I was building blockchain companies for some of the banks. Realized banks were not good owners or investors into crypto businesses, to be fully honest. So I was an investor, and then I just, at some point in time, wanted to do something in fintech because finance is all I know about. I wanted to do fintech, but I wanted to do something which would be global day one. If you launch a fintech business, still you need, in every country, you need to get a license, you need to get permission. It's very hard to do something which would be global and have global impact from the very first day, as opposed to other tech businesses, except DeFi. And so that's what brought me in. It's still a small and nascent space, but you can be global day one. And, I was attracted by that.
Yeah, that makes a lot of sense. That's definitely one of my favorite things about cryptocurrency is that it's global by default. So I guess my next question would be, what inspired the creation of overnight finance? Like, what problems are you guys trying to solve, and when did you start working on this?
The idea I had a year ago, and the inspiration was money market funds, traditional money market funds. I realized how much time actually I was spending yield farming, and I thought, the yields were much higher than they are today, and still I thought it was not good return on my time, and I felt that a lot of people who would otherwise be interested in DeFi would not want to be yield farming the way like spending so much time. And people who would kind of deploy like 10,000, 5,000, I felt, UI was so inconvenient, and yield farming projects required so much attention and involvement from the users that they were really kind of, despite huge yields, were not worth the time. So I felt that a low margin, low risk, um, adequate return product was in order for common people. And I was thinking, in traditional finance, I would typically involve spare. If I have spare cash, I would put it into a money market fund. It's, you never lose money in the money market fund. It's now below what you invested. You get very small yield. It's super liquid, but it's like you get something instead of zero in a super low risk manner. And that's I felt the product which was missing. Like, don't think about it. Don't research. Uh, just don't think about it. Just put the money in there. You'll get some yields, no risk, and then use the time to figure out where you want to invest. Um, and then I realized it was not available, to be fully honest. There was YEarn at that time. People talked a lot about it. I never found it attractive. Huge fees for something which was so straightforward. I didn't like it. Aave and Curve I love, but even then, already a year ago, the yields were not attractive. I feel they have huge margin in their yields. They make a lot of money by getting your money too cheaply. So I felt those were fantastic protocols, but in my view, they're more like bank deposits, paying you under the market rates as opposed to money market funds, which kind of pay you the market rates. And then I realized that this American regulator called SEC, they on one hand hate stable coins, but I found it amusing that they had actually invented stable coins. I realized that their regulation basically mandates money market funds to always be $1. So they really literally regulate that 1 unit of a money market fund in the US should be always $1. And actually, when it goes below $1, it's a panic, it's a force majeure, and they actually call it breaking the buck. So, and I felt it was too close to DPEG, and so I realized that if you build the yield generating stablecoin USD Plus, exactly like the money market fund, that would be a product which is in great demand. It would be amusing, kind of to take to joke around SEC, and also it's I felt it was natural form factor for it to be a stablecoin. So that's how the idea came, and that's what inspired us to start building it.
Okay, that makes a lot of sense, and it's pretty exciting inspiration. So I guess what would the main benefits of using USD Plus be like compared to another stablecoin?
Well, most stable coins don't pay yield. So benefit number one, you get yield. And USD Plus is pegged to USDC, so we guarantee that you can mint and redeem USD Plus with USDC one-to-one. It's actually very important, one-to-one to USDC. Any amount, million, 10 million, is just designed to be super liquid. The way we pick, so once you mint USD Plus, your USDC goes into our collateral. It's always 100% collateralized. And then collateral is invested across a number of DeFi strategies, which are all kind of no impermanent loss and all very low risk type of strategies. So the strategies include mostly stable to stable liquidity pools. Like we invest a lot into things like Synapse and USDC, USDT pools, things like this. And so every day there is a profit. So in every day there is a positive rebase. All the profit is passed over to our users at this point in time. Now, the magic of USD Plus is that it pays you yield in situations where you had none before. So we don't try to give you high APY. We try to give you infinitely more than zero. So like the number one magic power is paying yield in liquidity pools. So in a typical liquidity pool, I don't know, Dystopia or these days MMF is very popular on Polygon or QuickSwap. You typically, if you LP, you get fees and rewards. If you LP USD Plus into USDC USD Plus, then you have fees, rewards, and yield on top. And so you used to have no yield. Now it's the same trading fees, the same trading volumes, everything is the same. But now it's fees, rewards, and yield on top of it. So that's what we call giving infinitely more than zero. Also, we believe a stable coin is not something which has huge TVL and no trading volumes. We believe money is, like you can say, stable coin is really a means of payment, so real money, only if there is a lot of things being done with it. Not that it's being stored, but there are a lot of things which have been done with it, so like payments or trading. So we have a lot of pools where USD Plus is getting traded in things like VMatic, for example. So our VMatic USD Plus pool has very huge trading volumes. It has very meaningful rewards from Dystopia, and it's very good LP for people who want to, as alternative to VMatic USDC in terms of yield. But people who are also afraid to LP VMatic USD Plus can also enjoy our so-called ETS product. ETS product is the exchange traded strategy built on top of USD Plus. Vmatic pools. You can buy it with USD Plus. Then USD Plus is used on Aave to borrow Vmatic, and then the protocol invests Vmatic, farms Vmatic USD Plus pool in a hedged way. What I mean by the hedged way is that Vmatic, which is in the pool, is borrowed on Aave, so net position of Vmatic is zero. So all exposure you've got is all the just stable exposure, but the yields are the same as for Vmatic USD Plus. So it's a star product where we have to limit the participation of the users. But that's something which we build on top of Vmatic USD Plus pools. That's very unique, sustainable yields on your stables in the range of 20 to 30% in USDC, with all the rewards, all the yield you get in USDC, not in farmed tokens. So that's a very cool product. So far on Polygon, I believe we are the only ones offering anything like that. Last but not least, a lot of projects, for example, Autoclam, for example, Teto, for example, Sphere, have chosen to pair with USD Plus. Why? Large projects have a lot of liquidity on, outside on the dexes, but medium-sized projects are not as big as Polygon themselves or Ethereum, but like things like Autoclam, which is the leading game on Polygon, play to earn. They maintain their liquidity on the dexes, which comes from their treasury. It's their money. They need the pools for their users. It's not meant to be an investment. They just need it for the sake of the game. So people who farm clam in the game can kind of, sell the clam somewhere. So it's all their money. And in the past, they would just do clam USDC or something like that. And as they deposit in the QuickSwap or Dystopia, they would realize that was dead money. They have to keep clam USDC on QuickSwap, for example, because they need it for the game, but the USDC is not working. There's little trading, so very little fees, and there is no yield on a lot of money coming out of their treasury in that LP. So for projects, discovering USD Plus was fantastic, because once they moved to Clam USD Plus, they realized it's the same functionality, same exit opportunities, same liquidity as for USDC, but now their money is working, because on, I think it was like $300,000 worth of treasury they had to put in the LP on QuickSwap. Now that's something on which they're getting yield, and very attractive yield between 8 to 12% APY. So they switched. It's the same as it used to be, but there is now yield on top. And where they used to get 0, now they're getting 8 to 12% APY, and so they just learn what they're doing. So to sum it all up, USD Plus pays yield. It's very few are able to do. Magic Power is to pay yield in the LP, so it makes yield farming USD Plus pool way more capital efficient. And there are unique features. One is ETS, which is a very cool product we build on top of USD Plus Vmatic pools. And there are very interesting, attractive features for projects who want to maximize return on their own liquidity. They have to maintain at the dexes.
Fantastic. Yeah, that sounds like a lot of like efficiency happening with USD Plus in terms of the yield. I'm wondering, like, did you guys want to do a like screen share and like provide a bit of a visual representation of what you're talking about?
I can totally do that, actually. Yeah. So, but I think that Max already discussed a lot of it. So,
Great.
what do you think, Max? We could screen share.
I think it's important to screen share the collateral which is behind USD Plus. If you could maybe, so kind of to show people how it works, what is behind it, where the yield comes from, and that it's so well collateralized.
Awesome. And yeah,
Can you
I
guys
appreciate
can you
you.
guys see my screen?
Yeah, you can see it. It looks really good. And yeah, Max, I appreciate you going so in depth on everything. I definitely have a few questions. And if anybody else has any questions, Make sure to drop them in the text channel. I believe that there are whitelist spots being given away for best questions asked for the highly anticipated ETS. So
It's actually not anticipated. It's live. Closed beta is finished, and I think all the spots are full, or almost full. Oh, it's a few white lists on top of the cap, which we could distribute for the best questions. Yeah.
Yeah, this is the cap actually. So the cap is 275K. So we've almost hit cap. But reason why people like this product is that it's, as Max discussed, it's pretty complicated, right? It does a lot of different actions in one action, right? And you can do like as with everything in overnight, you can do what we do manually. We will do exactly the same results, right? In terms of the APYs, ETS is something that we start to earn a little bit of money, and we take commission, we take management and performance commission. But if you start doing that yourself, um, it's going to take you like it can take in like up to like 30 minutes per day to just manage what ETS is doing for you. Max, do you want to share a little bit more about like what kind of steps are there, or people can just read about that? What do you think?
For USD Plus or ETS?
ETS.
Yeah, so for ETS, it's quite straightforward. I actually think it takes more than 30 minutes per day, and a lot of people are just not able to do because mathematics is actually sounds simple, but quite difficult. Just like the mathematics of rebalancing the portfolio properly, at least I have a lot of mathematical education, but was always making mistakes and was not able to balance it properly. But basically, the way it works is ETS for thematic USD Plus is pegged to essentially USD Plus. So one ETS you can always kind of redeem for one USD Plus, mint and redeem with one USD Plus. And there is the same mechanism of rebase as for USD Plus, which works for ETS. Now, but the strategy inside the ETS is quite different. It's medium strategy. We call it hedged strategy. So the goal is to farm Vmatic USD Plus pool on Dystopia. There will be additional ETS developed, like for Vmatic USDC and some others. But if you notice, typically people look at those pools like Vmatic USD Plus, Vmatic USDC. They see yields which are very, very attractive, so high APYs, APRs, but they're afraid to farm it because of what they believe is impermanent loss. And what they believe is like price volatility of Vmatic. We're in the bear market. Vmatic, I remember the Vmatic was 1.5, maybe even 1.6 at some point in time. Then it fell to 50 cents 3 times. And then it grew again. Now it's at like at 80 cents. So 1.6 times higher. So it's actually a lot of volatility in the price of Vmatic for good reasons. But for normal people, it's very stressful. This volatility is killing people. So that's why APYs have to be so high, but so few people abstain from getting them. What we do with ETS is very simple. You put in USD Plus, we use it as collateral on Aave to borrow Vmatic, and then we put Vmatic and USD Plus into Vmatic USD Plus pool on Dystopia in this particular instance, or in any other DEX. And what happens is that all the Vmatic which we own borrowed. So all the Vmatic in the pool is borrowed by the strategy. And so if it goes up in value, but also your debt goes up in value, the impact of Vmatic volatility, price volatility, is neutralized. If Vmatic falls 3 times, 10 times, doesn't matter, the amount of your debt, so the value of your debt, the Vmatic which you owe, also goes down in dollar terms. And so again, the effect of the Vmatic price volatility is neutralized. There is some impermanent loss, which is much smaller than people think, which we are managing through frequent rebalancing. But Vmatic volatility, price volatility, is neutralized through this hedging mechanism where we don't buy Vmatic, we rather borrow it against USDC. And that's what allows us to create a product which is essentially, stable coin product. It has not had a loss. We launched it in alpha and then closed beta and then beta. I think early July. There was a huge volatility in Vmatic, not a single day with a loss. So it allows really to efficiently invest your stables, get very decent returns, much more than you get with stable to stable pools, with substantially less risk than crypto to stable pools, but more than stable to stable pools. So it's moderate risk strategy. The loss cannot be excluded, but it's actually quasi stable. It's almost stable coin investment strategy, which is being provided as a package within one token called ETS. Andrew?
Yeah. I just wanted to add here. I'm screen sharing my screen, and you can see that this is the dynamics of Matic price on Dystopia, and you can see that August 18th, the price of Matic dropped from 90 cents to 78 cents. So this is the loss which would have been occurred if someone would just not use ETS but buy Matic and provide liquidity there. And this is something that happened on the August 18th. If we go back to our strategy and let's see if we have this here, what happened on 18th. Yeah, on 18th, the APY of Matic ETS was 6%. So it was still profitable thanks to the rebalancing process which is happening on the background. And also I opened the Aave so that you can see what you can do here. You can provide supply as collateral, and you can borrow against this collateral. And when you do that, you will see there's a health factor here. You will see a health factor of whatever, like 1.5, 1.3, 1. And you want to make sure that this health factor doesn't drop below a certain number. And I was doing that myself manually just to understand how the strategy works. And I can tell you that it's a pain in the butt to go here and see that you're not liquidated thanks to Matic price drop or gain, right? Because if Matic gains in price, like we had here from 91 cents to a dollar, then it means that the Matic which you borrowed now costs more, and the health factor immediately dropped in no time. The health factor dropped from whatever you had there. In my case, I had 1.2. It dropped to almost 1. So I was almost liquidated, and if I were liquidated, I would have paid a fee, a liquidation fee. So these are the things that you don't want to think about. ETS is something that you provide liquidity to, and then you just enjoy the APYs. So 28%, 28.7% is you don't you're shielded from the Matic price change. That is the revolution in DeFi. Actually, this is for people who just want to have a peace of mind. They want to invest there, and they want to have liquidity because any moment in time, you see, I keep a small amount here because I just need to pay here or there. I can immediately with the redeem this ETS, and I will get the money back right away. This is absolutely unseen, right? So you don't have to stake it, you don't have to lock it. So this is absolutely unseen in terms of um, how it is useful for people. And yeah, it's currently at its cap, but we will be giving away five spots. Probably we can jump to it because it's already some time. We've been through half of this conversation. Sonzi, do you think that it's worth taking some questions from the audience?
Yeah, absolutely. We got one coming in from Fran. And Fran says, well, they know that USDC is totally collateralized, but in the case that USDC detaches itself from the dollar, what kind of support or insurance do you guys give your users? So yeah, definitely curious to hear your thoughts on USDC. And
Yeah, USDC is extremely controversial these days after the turn out the cash. And actually, it turns out in the code they have opportunity to actually burn USDC in your wallet if they, if there is a sanction or there is a court order, something like this. So it's extremely controversial. But it also turns out that USDT and BUSD actually have the same. So indeed, at some point in time, USDC can be worth much less than US dollar. USDC can in particular, you can imagine a scenario where there is a court order to burn, half of USDC in people's wallets because somehow that money had been used in a thing like Tornado Cash by people you don't know, but who owned this USDC maybe 10 steps away from you, and you just got that money without knowing it. So that's, of course, a possibility. Now, we do not guarantee that USD Plus can be converted into cash. We do not guarantee it for several reasons, because that's not our business. We don't touch cash. And from regulatory point of view, if you guarantee, like we designed USD Plus to be compliant with, current and future regulation. So if you guarantee cash, there is banking regulation you need to comply with, and that's too costly and probably doesn't make sense. But if you guarantee peg to the digital asset like USDC, then it's a different type of regulation and it's much lighter and it makes more sense. So what we guarantee is that you can redeem USD Plus for USDC, or you can mint USD Plus with USDC. We do not guarantee the peg between USDC and dollar. That's not what we are into. That's beyond our control, and that is something the risk you have to assess for yourself. In my personal opinion, not as the founder of Overnight, but like as Maxim, my personal opinion is that we have to bet on the peg of USDC, USDT, BUSD. Why? Because if you don't believe in that peg, we should not be in crypto at all. So whoever kind of sees this risk, which we are all debating, should understand this is like a terminal risk. This is the risk that the entire DeFi, entire blockchain movement dies. So we either should take it or leave it. There's no way to hedge it or minimize this risk. So yeah, that is our stance on this. If at some point in time USDC is more controversial than USDT, or USDC is doing some really bad things to DeFi which BUSD and USDT refuse to do, then in those situations we have full possibility to switch our peg away from USDC to USDT or BUSD. So we can do that at any point in time, and very happy to do that if our community decides so. So that is our kind of backup plan in case one of those big stablecoins becomes, implements censorship.
Yeah, for sure. That makes a ton of sense. And Sporkman just asked, like, if you could explain the rebalancing, how is it pushed? And like, I guess I'll add to that and ask, like, do you guys have a governance structure or like any plans to have a governance structure, like a DAO of some sort?
Yeah, we have the governance structure which we copied from Compound, and so any changes to USD Plus or ETS have to go through voting. Now, at the moment, we have not yet issued our governance token, which we will at some point, but we have not issued a governance token. So that is why all the tokens, sovereign tokens, which have voting rights, actually belong to the team. And so it's essentially functioning at the moment like a fancy multi-sig. But once we do the public sale, which we hope to be in Q4, maybe early Q1, but Q4 we hope, subject to market conditions, it will be proper DAO structure with proper voting and decentralized governance. So that's where we are in terms of the governance. How Rebase works is the following. So everything is smart contracts. So money is not touched by anyone. So whenever there is an attractive strategy, for example, we invest a lot into Synapse, or Polygon recently introduced C-pool lending, we design a contract, smart contract, which we connect to USD Plus portfolio manager, which looks after balancing the portfolio. And that contract has like code and has a target weight for the strategy. So we say, for example, C pool should be 15% of our assets. And the logic within the C pool contract is that when money goes into USD plus, 15% will go into C pool. When money is withdrawn from USD plus, 15% of the withdrawal will be withdrawn from the C pool, so to provide you with immediate liquidity. And then once a day, we will rely on oracles, and we will run a calculation. We call it mark-to-market calculation. So we calculate the value of the assets, which are collateralizing USD plus. And so imagine there is 100 million of USD plus. At the end of the day, it will probably become, 100 million to 100,000. And so at this point in time, the value of the collateral exceeds the amount of USD plus in circulation. So if 100 million of USD plus is secured by 100 million to 100,000 of assets, we are 200,000 above the par, we above the peg. And so at this point in time, once a day, we will mint additional 200,000 of USD plus, and they will be passed over to all the USD plus holders in the form of the rebase. And so the mechanism works that essentially you can think of it the following way. So whenever the market value of the collateral backing up USD plus exceeds 100%, there will be rebase, which will, will essentially, pay out of the yield to USD plus holders, which will, rebase the collateral value to USD plus in circulation to 100%. So essentially, we rebase the amount of assets we've got back to the 100% every time we rebase. That's how it works. And by the way, that's the same mechanics as for the market funds, money market funds, as per the regulation in the United States.
Yeah.
Clear?
Yeah, that's clear. Sparkman, it says it seems super complex on the back end, but it's real simple for the user, and I agree with him. Like,
That's exactly it. Yeah, you got it. It's actually extremely difficult from the financial management perspective, and some coding, but like we have such a strong team that but it's like really all the like you come to a bank, and inside the bank in traditional finance there's so much complexity. Most of the people cannot understand it. Funny enough, most bankers cannot understand the complexity of what every bank can do. Like if a bank has 100,000 people working for it, maybe there is 100 people only who understand everything which is going on. And that's why we always have this banking crisis and stuff like that. Here is the same, but just so transparent. We do all the complexity, we put it into the smart contracts, and then everything just works. For you, it's just you just put money in, no risk, immediate liquidity, just enjoy the rebase every day. Just like get your rewards in dollars. Don't get your rewards in some strange tokens. You reward your rebase every day, do nothing. You just get the rebase and enjoy the rebase every day on your free stable coins, free cash. Just do nothing, just enjoy the rebase. That's the beauty of it. Like simplify complex stuff. It saves you time. It saves you stress. It saves you, efforts. It saves you risk of making mistakes like misclicks and stuff like that. So it's a lot of indeed the goal is to simplify complex things. So thank you for this comment.
Yeah, absolutely. It's awesome what you guys are doing. And we got a couple really good questions coming in. So, in regards to like, say I'm holding USD plus and I want to like redeem it for one of the underlying currencies like USDC or USDT, is there like a waiting time in order to redeem those?
No wait time. No, immediate liquidity, any amount. So we are in the business of not giving you high yield. We're in the business where, first of all, there is immediate redeemability. We guarantee on the spot redeemability, no waiting times, immediate liquidity. That's actually very, very important. You click one button, like when there was this huge volatility, I noticed one investor, he was coming in with 500,000. It was in June. In the morning, in the evening, he would withdraw 500,000, put it into a different thing. Then he would come back and put in 1 million, then withdraw it back. It was crazy. No waiting times.
Yeah, and are there any fees when that's all going on?
There is a fee of 4 basis points, so it's $4 on 10,000, which we charge for mint and redeem. But that fee is there to cover some direct costs, and whatever margin, the margin goes to USD Plus holders. So it's the fee which is kind of spread across the USD Plus holders. We don't retain it. And so if you come in and you put in your money and you stay long, then you're getting yield from USD Plus this fee. If you do a lot of in and out, you create extra costs for other users, and that is why you have to compensate it. This fee is also there to prevent front running. When we didn't have it, somebody was actually smart enough to come. We usually rebase around midnight San Francisco, plus or minus. We randomize it a little bit. So somebody was coming in like half an hour before midnight San Francisco, and withdrawing half an hour afterwards. I think they even built a contract to do that, just to kind of
Oh wow.
for our, and then that's when we introduced those rates, because essentially to prevent people coming in like 1 second before the midnight and then leaving 1 second after. And it's not for us. This money goes to USD Plus holders. We make our money, by charging fees on ETS. We make our money by running arbitrage on USD Plus. Like Vmatic USD Plus, we arbitrage it against Vmatic USDC. It maintains the peg, but it's also actually profitable business. That's where we make the money. USD Plus is just such a cool product. At some point in time, we will charge management fee, which will be not more than 0.5% per year on the TVL, so 0.5% per year only per year. We're not charging it yet. It's just so small that we just don't want to, charge it to the users. And as I said, our business model to make money on DTS and to make money on arbitrage.
Okay, cool. That answer. I was gonna ask how you guys generate revenue, but you totally just answered that. So I'll get back to Sporkman's got a couple questions. He's wondering for the ETS, how do you choose the cap and like why is it limited?
Yeah, so the key idea of there is not unfortunately much science. We still need to kind of see how the product behaves. But we introduced the cap. It's actually quite common practice for this type of products on other chains. But we charge fees for this product. So people who come in, they pay a fee, and they intend to stay for a long time. So it will be unfortunate if you come expecting kind of an average of 20 to 30% APY, then suddenly there is like 10 million people who come over, and instead of 500,000 pool, it's like $2 million pool. It could easily happen. And then your yields are no longer, 20%. Your yields are suddenly 5. So we want to prevent that. And we believe, the product is so complex that actually, if people don't invest into ETS, they will not do it themselves. They will not build a parallel product like this. So we limit the cap to make sure that people who join, they can enjoy the sustainable yield. And there are some entry fees they have to pay, and that's basically how we make the money. But we cap it to make sure that the yield is high enough to cover the fees very quickly, and that people who stay long can really enjoy proper yield in a sustainable manner. That's the only point for that. Now, if there is science to figuring out the cap, not yet. It's more like our feeling. And we look at the yields, and basically we want to set up the cap in a way that you can make your 20-30% long term.
Okay, cool. Thank you for clarifying on all of that. The next question that Sporkman has is regarding like, is the liquidity held solely by overnight or on another platform? And I'm wondering if maybe you want to like perhaps dive a bit deeper into like the security of the whole platform. Like, how are you guys keeping users' funds safe and secure?
Yeah, so everything is in the smart contracts. So there's no multi-sig directly. So there's essentially voting mechanism, DAO mechanism to control our portfolio manager. But then the money is kept in contracts, which I proved through voting. and yeah, that is whenever there is a mean to redeem, new money coming in, coming out, we don't touch the money. Everything is automated. We are audited by Haken. We've been doing this since November. There were certain attempts to kind of break the protocol, which have failed, to be fully honest. What else can I say about the security? All the strategies we choose are always no impairment loss strategies. So it's always stable to stable. It's only high quality stables. So we don't accept algorithmics. We don't accept anything which is not borrowable on Aave. If something is borrowable on Aave, we will not necessarily add that stablecoin. We'll just do our own due diligence and make sure it's reliable stables which underlie USD plus. Well, so far it's USDC, USD DAI, USD, which is like True USD and other characterized reliable stablecoin, and NUSD by Synapse. NUSD by Synapse is USDC, USD DAI packaged and wrapped on Ethereum. So that's essentially the same stables. So and by the way, every strategy which we deploy in the smart contracts, every contract has its own address. So if you go to our website, you'll click on the collateral section, you see which strategies are currently deployed, and there will be a link to each of the strategies. So you click on that link, it gets you to the page on DBank where you can audit yourself that the money is in that contract and how much money is there, and how much reward is accumulated and what's happening. So it literally every strategy which we deploy is a smart contract which you can audit online at any point in time. It's super cool.
Yeah, that is super cool. It's a very intuitive front end for sure. Um, so I'm wondering, like, you guys have already like scaled up pretty quick. You know, you've got a lot of partnerships and lots of utility going for the USD plus. I'm wondering, like, what's next in the roadmap for you guys? Like, what's the vision?
Whew, so we want to add insurance. So we want to grow like crazy, and of course, but like safety and transparency and kind of and liquidity. So people keeping your money liquid, being able to kind of redeem it instantly for you without any losses, without any costs, is like our number one priority. So yield we don't care about so much. We yield between 8 and 12%. It's not big. If you want big, buy ETS. But USD Plus will give you between 8 and 12%, which is reasonable but not super high. And it shouldn't be super high, but it's super safe. So we want to keep your money super safe. And that is why we want to build insurance. So some of the strategies which we have, like my biggest nightmare is that one of the protocols gets hacked. We try to stay away from bridges. That's even that's the most kind of dangerous area. We try to minimize the number of lending protocols we invest into, because lending protocols get hacked the most. We really like to invest into stable to stable pools, but still, kind of as we grow, we have to see, we have to deploy money into various pools, into various protocols, and to diversify the portfolio. And we cannot exclude that one of those protocols, gets hacked. And that is why we want to build insurance. So not only your money is safe, but specific strategies underlying USD Plus on top of that are insured. So it's not just safe; it's super safe. Or maybe it's like it's not super safe, but it's extra super safe. So that's kind of an important item on our agenda. Of course, more partnerships, more dexes, more chains. And then Q4, we want to run the public sale. So there will be maybe some pre-sale to that. We're still kind of working that out. Maybe that will be kind of a bond issue. during the pre-sale, where we'll offer kind of pre-OVNs, which you'll be able to redeem for OVNs during our public sale. So that's something which we are working on, and considering very actively, and hope that's going to be in Q4. So insurance and public sale are two major items on our agenda.
Fantastic. That's
Oh, and
really exciting.
Euro Plus. I forgot. Guys, for those in Europe, Euro Plus is coming. Euro Plus is going to be so cool. It's going to be amazing. So you will be able to put in your euros, and it's going to be Euro Plus. It's actually one of the big stablecoin issuers in Europe asked us to build Euro Plus for them. It's actually very easy to build based on our infrastructure. So we're going to do Euro Plus, and it's going to be the coolest thing after USD Plus, and after ETS, and after insurance, and now after public sale. But it's going to be very cool for everyone in Europe.
Sweet. That's super exciting what you guys are doing. Really looking forward to everything. Um, cool. Well, I feel like I'm basically running out of questions here. If anyone else has any, make sure to get them in quick because we are running a bit short on time. I guess one really key question that I should ask is why did you guys choose to deploy on the chains you did, particularly Polygon?
Um, when we invented this thing, we didn't understand differences between chains, and we were just lucky that we chose the best chain to be on.
Pardon?
Yeah, I'm saying when we invented USD Plus, we did not understand differences between different chains, and it was a lucky choice to have chosen such a great chain as Polygon. I think we really got lucky to choose the best chain. But I would lie if I say that at that point in time we knew what we were doing. To be honest.
Yeah, okay, that's fair. That's fair. Yeah, definitely made a great choice, you know. But yeah, no, that's funny. I'm glad that things are working out for you so well, naturally. And I guess another good question to ask would be like, what is your philosophy?
Liquidity and risk uh, are more important to you. That's probably the most important thing. So safety first, well, liquidity first, safety at par with liquidity, and APY is just derivative from that. So it's all about low risk. It's all about making sure your money is safe. We audit where we invest, we audit those protocols ourselves. We don't rely on the third party audit. We audit ourselves. So minimizing risk, maximizing liquidity, that's what we care about. Uh, making sure you feel safe when you put your money, like that you don't even think about it. You put your money, you know it's safe. You feel safe, you don't wake up at night, you don't look at your computer and phone all the time, is everything okay? It's just safe. That is our philosophy. Safety, liquidity, and risk more important than APY. That's what we are about.
Fantastic. That's awesome to hear. Oh, Sparkman has got a question. How many languages do you speak?
I speak 3 languages, including my native one.
Cool. What languages are those?
French, Russian, and English.
Okay, cool, cool. Well, I feel like we've gotten a good amount of alpha. We've gotten a very high level overview of everything overnight finance has to offer and what we can expect in the future. So, I don't know. Is there anything either you or Andrew want to touch on that we haven't already?
I think we're good. I think we're good. Thanks for all the questions, guys. If you have any questions, please drop them here or proceed to our Discord. Where really, I think the link was the link is already there. So yeah, we're happy to chat more. It's good to see you guys here, Sporkman. Yeah, good to see you here as well. And everyone who is new to overnight finance and USD Plus, guys, we are a very open community, so feel free to go and check us out. And yeah, let's keep in touch.
Thanks everyone for hosting us. Thank you, Zanuzi, and really appreciate having an opportunity to speak to the community.
Yeah, absolutely. It's been great having you. And yeah, I got all the links in the chat. So the Overnight Finance website, Twitter, Telegram, Discord, so you know where to follow up with them if you got any questions for after this. And yeah, thank you, Max and Andrew, so much for coming out today. Really appreciate having both of you and giving us such a high level overview of everything. And thank you, everybody, for coming out and listening.
Thank
Yeah,
you.
and I guess we need to choose three winners. So that's gonna be definitely Sporkman, um, Frana Reza, and Mike Fast.
Yeah, Mike Fast coming in with the last minute questions. Good job, man. Um, yeah, all right. Well, this has been amazing. Thank you so much, everybody. And I hope you all have a wonderful day.
Yeah, thanks, Anzi. Thanks for having us, guys. Please DM me. I DM me. Well, I will need your contract. Wallet address. Please DM it to me, and I'm collecting those wallet address. So it's again, I'll tag you. Please DM me, and yeah, enjoy the ETS over the cap.
All right. Bye, everybody.
Thanks. Bye bye.